Market Catalyst. I'm Julie Hyman. We are 30 minutes into the U.S. trading day. Let's get to the three market catalysts we're watching this hour. First up, following the ouster of Venezuela's Maduro, we'll break down what comes next for the nation, oil, and global relations. Plus, we'll talk about what to watch at CES as the CEOs of NVIDIA and AMD take the stage at that consumer tech conference. And as AI bubble fears linger in the market, we'll look at why the industry may have some parallels to Enron. Taking a look at the major averages right now, we are seeing a rally taking place here. Interesting here, what is leading this rally today? It's the Dow. The Dow right now is up about 525 points, give or take. That's about 1%. The S&P 500 is up about 0.6%, and the Nasdaq Composite is up about 2/3%. Now, I wanted to go back to the S&P for one moment because we always talk about the Santa Claus rally, and some people forget it actually includes today and tomorrow, Friday and today, the first two trading days of the year. If you look at the 5-day chart, or actually let's look at the 6-day chart here in the market, we have a little bit of a decline. So, these things are fun to talk about statistically. Are they a perfect indicator for what we're going to see next? Not necessarily, but we have been seeing some recent declines here. And then, of course, elsewhere, we continue to watch what's going on with crude oil prices after we saw Nicolás Maduro face charges here in the U.S. is actually in a Brooklyn federal court. We see oil prices starting to push a little bit higher here. We're going to talk much more about the implications for oil in just a moment. But getting back to stocks here, as I said, the Dow is leading today. In other words, we know that tech was really dominant once again last year. Today, we've got a little bit of rotation. Some other groups that are taking center stage. Financials are leading gains today. They're up about 2%. Consumer discretionary up 1.3%. And energy is also gaining. Now, to be sure here, this is one day, doesn't necessarily make a trend, but you do also tend to see a little bit of rotation in the waning days of one year and the beginning days of the next year. Looking at the NASDAQ 100 specifically here, you do see a little bit of a mixed picture. Tesla bouncing today, even after its EV crown was taken by BYD. Amazon shares bouncing. Broadcom shares are down. So not necessarily a lot of fundamental news driving here in these early days of 2026. We will, of course, though, be watching headlines out of CES and see if that starts to affect what's going on here. So that's what's happening on that front. Also, want to try and find these energy stocks here to take a look at as well, because definitely we have seen many of those on the move. Here's big oil, right? And we've got a little bit of a mixed picture internationally, but Exxon's trading higher. Chevron, which is the only oil company from the U.S. that is currently operating in Venezuela, is higher by 2.8%. Earlier, we had seen bigger gains for some of these stocks. Still higher, but not by as much. So let's talk more about this oil and gas and energy theme this morning. Those stocks broadly are pushing higher after the U.S. launched a surprise attack on Venezuela this weekend to remove the nation's president, Nicolás Maduro. The weekend upheaval in the OPEC member nation comes at a time when oil markets are already grappling with a growing supply glut. So what happens now? What does this mean for commodities and the geopolitical landscape? Let's bring in Lipow Oil Associates president Andy Lipow and Jorge Leon, Rystead Energy head of geopolitical analysis. Thank you both for being here. Jorge, I want to go to you first here on what this does in terms of destabilization of oil supplies globally with this action in Venezuela.
Thanks, Julie. Well, I think this is important from the point of view that this involves Venezuela, a founding member of OPEC, as you correctly mentioned, the country with the biggest reserves around the world, 300 billion. But in terms of actual production, we shouldn't forget that Venezuela is just producing around 1 million barrels per day, slightly less recently. And that is less than 1% of global supply. So it's important, but it's not massive, particularly in an environment where we are facing oversupply in the market, around 3.5 million barrels per day of oversupply during 2026. So losing 1 million barrels per day would not be the end of the world.
And Andy, this also highlights an important point in Venezuela, that there is the potential reserves and production in Venezuela and the actual production in Venezuela. And there's quite a gap between the two. So how does this change that? Are we going to see a closing of that gap as a result of this?
Well, Julie, thanks for having me. Seizing oil reserves that are in the ground is completely different than actually producing those reserves and getting it to market. And given the current state of disrepair in the Venezuelan oil industry, it's going to require tens of billions of dollars just to repair the oil infrastructure, but also to repair the power grid in order to supply electricity to get that oil out of the ground. So it's unlikely to see a material increase in oil production and supplies out of Venezuela for a number of years. But the fact that the reserves are over 300 billion barrels is quite tantalizing to a lot of oil producing companies to have a look.
Andy, let's dig into that a little bit more. I was talking earlier with one of our reporters who's been covering this, and he pointed out that most of the oil in Venezuela, the type of oil it is more costly to turn into useful stuff. And most of it is used for things like asphalt currently. I wonder what you think the U.S. company appetite will be to make the kinds of investments necessary in Venezuela to increase, even if they see the allure of that increased production for them, is it worth it to them?
Well, we should separate this into the producers and the refiners. Sure. Back in 1997, U.S. refiners actually imported 1.4 million barrels a day of Venezuelan heavy oil. So the appetite from the refining industry is really there. From the producing side, when you have oil prices below $60 a barrel, it's not such a great economic deal due to the higher cost of getting that oil out of the ground, combined with its lower quality, getting lower prices than, say, WTI or Brent crude oil.
Oh, and let's look at also some historical parallels, right? Because we have seen this movie before, so to speak. Jorge, I know that's one of your areas of focus here. Whether you're talking about Libya, whether you're talking about Iraq, how have things sort of followed for the oil industry in those cases? And maybe what lessons has the U.S. learned?
I think that there are two extreme cases, if you want, from historical references in forced regime change. You have the extreme example of Libya, where after Colonel Gaddafi was killed, production never recovered. We never really went back to 1.5 million barrels per day. After so many years, 15 years, the country has broken apart, two parallel governments, civil unrest, and that's one extreme scenario. The other extreme scenario could be Syria, what we've seen in recent months, a smooth transition, relatively peaceful transition, and then the country opening up for international investments. Now, do we stand in Venezuela here? I think it's difficult to say at this point, given a lot of uncertainty, on the ground. But I would agree with Andy in that this is not going to be an easy process. I don't think it's going to be easy. I don't think it's going to be fast, and I don't think it's going to be cheap. If we really want Venezuela to increase production, let's say from 1 million barrels per day to 2 million barrels per day, that is unlikely to happen at least in the next 5 years. And the estimate is that the companies will need to invest around 110 billion US dollars in the next 5 years. That is a lot of money.
A lot of money and a lot of time, for that matter also. Jorge, I also wanted to ask you, in terms of the strategic importance and significance of the U.S. effectively now having control over that oil supply versus, say, Venezuela selling it to China or to Russia. So how does that change the geopolitical leverage, so to speak, or the balance, if you will, because of this?
I think it does change massively the balance. There was a lot of intervention from Chinese firms there still is a lot of Chinese firms in the Venezuelan petroleum industry. Let's not forget that 3/4 of Venezuelan crude exported were flowing to China. So that is sort of a big blow to Chinese refineries, particularly teapot refineries. And also, let's not forget that this was heavily discounted barrels. Now, it's not the end of the world in the sense that there's still a lot of barrels, sanctioned barrels around the world from Iran and from Russia. So Chinese teapots could still rely on those barrels. But clearly this changes the power, if you want, within the America's hemisphere, and it's a blow to the Chinese companies and to Chinese influence in the region for sure.
Andy, let's bring it back to the oil price for a moment. Understanding that there are a lot of uncertainties here, but if you had to, make a forecast as to where we're going to see oil prices 6 months, 12 months from now, given that we have seen this action and given maybe the prospects for other actions this year, what would you say?
Well, I'm forecasting that by the end of the year, we're actually going to see oil prices slowly drift up to about $65 a barrel. Now, of course, the events in Venezuela can contribute a small amount of that increase, but I also expect that we might see a change in the OPEC Plus policy, where they have been restoring their voluntary production cuts in 2025 using quite an optimistic forecast of demand. And that has just simply resulted in a significant supply surplus and lower prices. So given that their domestic budgets are under strain due to this revenue shortfall, we might see them actually reverse course and reinstitute some voluntary production cuts. On the other hand, we still have to contend with the geopolitical situation in Iran and the unrest that's occurring there, and whether we might see more action from Israel and the United States, which could potentially impact on supplies out of that region, although that certainly hasn't been the case over the last several years.
And Jorge, your best guess at what happens with supplies and the OPEC production cuts this year?
I think my guess at the moment is that the prices will continue dropping. I don't think OPEC Plus might reverse course. I think that they're clear on the direction of travel. The speed could be tweaked, but I don't see OPEC Plus reversing course. And at the end of the day, we also have some geopolitical tension that could support oil prices. I'm especially focusing on Russia, Ukraine. There could be a peace deal soon, and that could also unlock much more Russian barrels around the world, adding downside price pressure. So I guess I'm a little bit more bearish than Andy.
That's what makes a good segment, guys. We'll see what ends up happening. We'll check back in with both of you. Andy, Jorge, thank you so much. Really appreciate it.
Thank you.
Thank you.
Coming up, we'll break down the biggest questions facing tech companies as CES kicks off in Las Vegas. Stay with us. Tech heavyweights have descended on Las Vegas for the annual CES Tech Conference. For more on the challenges and questions facing AI companies, we're joined by Maribel Lopez Research founder. Maribel, thank you so much for being here. So what should we be looking for out of CES here? It feels less like there's sort of killer apps or gadgets that are coming out, and it's more about the big picture AI vibes. But you tell me.
This used to be a show that was about TVs, that was about big autonomous driving, new cars, flashy things. Really, I think the E in consumer electronics show is actually starting to stand for enterprise. We're seeing a lot more around AI right now. The big deal, everybody's holding their breath to see what the chip companies come out with next, what they're going to signal is the big push for 2026 and beyond. I think we're going to hear a lot about physical AI, Julie.
Is it going to be harder for them to keep, jumping over that bar? Because we have already seen this sort of relentless push to advance. At what point, or maybe it's happened already, they stop impressing the market?
I think there's flash, and I think there's sort of the reality of the market. And when we think of the flash, we're always looking for these new big gizmos. We look at some of the presentations Jensen's done. Big robots on stage, really exciting, flashy, right? Now what we're talking about is edge AI everywhere, in every device, whether it's a TV, a smartphone, something that you would have thought was small and didn't even need computing or AI before. So that's the momentum and the excitement that they have to try to engender with these presentations. And we're going to hear a lot about from the edge through the cloud to try to demonstrate that there is basically opportunity up and down the stack. This is a really important show, particularly for someone like AMD and Qualcomm, who have to really say, we're breaking out and going into new markets and owning those markets.
Yeah, and Qualcomm's mantra has been edge, edge, edge for a while now. I guess the question is, Maribel, do we need AI and all of that stuff? Those, as you referred to, those little things that you wouldn't think would need AI, do they need AI?
I think whether they need it or not, it's going to happen. I think if we look forward in 27, 28, if you don't have an intelligent product, people aren't going to be interested in the product. So it will happen. The question is at what speed and at what cost? And that is the thing that we're trying to balance right now is can we get AI into products at the right price point with the right chipset? And this is one of the reasons why people are looking forward to hearing what AMD has to say about CPUs. Like all the heat and light has been about GPUs. So is it just GPUs or are we actually looking at other computing platforms? Intel trying to make a comeback with their Panther Lake. We're going to see a lot of enthusiasm for how to get real serious AI hardware into every layer of the device stack.
So Maribel, as you then ask these questions going into this year and look at what these companies are going to be trying to convince the market of, how should investors be thinking about it? Should they, be behaving and investing as though they are going to, that we are going to see this everywhere, that there is going to be uptake, that these companies are going to continue to be successful at doing this?
I think we've already seen that investment, Julie. I think people have already went in really deep, really hard in AI. And I think now the fear around the bubble, it's a legitimate fear. We still have a long way before there's anything that would be considered a crash. The question is really about upside. If you invested it early, you're doing great. If you've invested in it recently, you're just not probably going to see the type of gains that you thought you would see in the time frame that you want to see them in. So in some ways, this is a long or short game, depending on when you came in on the AI journey.
Are there some places where there is still that upside?
Right now, I think we're still in a picks and shovels market. Really. So if you are doing chips, if you are doing big iron, Lenovo is going to make a big launch at CES as an example, which to think Lenovo and CES outside of PCs, you wouldn't have thought of those two things. But it just goes to show that that market still has a lot of upside for building the infrastructure for AI. It's not typically what one would think about at CES, and I'm sure we're still going to see some flashy robots and other things come on stage to make it kind of cool and sexy. But big iron and chips are still where it's at for the short term.
Maribel, since you mentioned robots, I'd like to ask you about robots. I mean, we hear people like Elon Musk talking about robots becoming more ubiquitous at some point. How close are we really to that point?
I honestly think if we're looking at it in any large-scale production, these are very expensive. They only go into certain environments. So we're still talking a couple of years before you see any real kind of penetration around that. But I think what we're trying to do right now is prove in that robots actually can be in certain environments and be very effective and deliver ROI. We're seeing it in manufacturing. We're seeing it in warehouse logistics. We're talking about hospitality as well as another opportunity. So that is real. It just still is at a cost point that's prohibitive for mass deployment unless you can see serious efficiencies by combining robots and humans together in a way that you don't worry about the robots hurting the humans, which we're still working on.
Yeah, that is a challenge, I guess. And when you talk about these, are we talking about humanoid robots? Or, I mean, the robots I see, like Serve Robotics that delivers food, that is very far from a humanoid robot. It's a little box on wheels, right? So do you think the phase that you're talking about is much more going to be dominated by non-humanoid robots?
I think in the industrial set, we're going to see both. We're going to see humanoid and non-humanoid robots. And that is where this is going to happen first. That's where it has to be proven out first before you see, say, companion bots in household. We have cute little robot vacuum cleaners, but moving beyond that, we have to have some serious confidence in the fact that a robot, which is a very big machinery, a piece of machinery, will not hurt an individual or a pet or the house. So I think it's a phased progression. And right now, we just have to get these things at a relatively affordable price point into enterprises where they have a true ROI use case. And those are the industries I mentioned before, such as manufacturing, such as moving into hospitality, perhaps even moving into hospital environments.
Oh, interesting. And yes, obviously, not hurting people or pets is sort of the base level here that we have to move from. Maribel, thank you so much. Appreciate it.
Thank you.
Coming up, we'll bring you today's top analyst calls on Wall Street and hear from OpenAI CFO Sarah Friar. Stick with us.
Welcome back to Yahoo Finance. I'm Brooke DePalma. Let's turn now to some of today's top analyst calls on Wall Street. We're watching shares of Uber, Coinbase, and Duolingo. First up, let's take a look at Uber because that stock got a downgrade from Melius Research to sell from hold. Analyst Connor Cunningham said that Uber is very clearly in the leader position when it comes to rideshare and delivery, but given that position, it has the most risk from increased competition. Cunningham also said the autonomous vehicle competition is set to intensify this year and beyond, and that could potentially impact returns for Uber, even though it has partnerships in this space. There are currently 50 buy ratings, 11 holds, and this is the only sell rating of Uber on the street. Next up, let's take a look at Coinbase because Goldman Sachs upgraded the stock to buy from neutral. The analyst said it sees growth potential from new products like tokenization and prediction markets. The stock is down nearly 6% over the past year, which it believes provides an attractive share price for investors to get in on. There are currently 25 buy ratings, 12 holds, and 4 sells on the street. Last up, Duolingo, because Bank of America upgraded the stock to buy from neutral. The analyst said it believes its value proposition as an entertainment product is not reflected in the growth forecast and that the platform's rapid-fire, bite-sized lesson plans provide superior entertainment value compared to the majority of mobile games. There are now 17 buy ratings, 9 holds, and 1 sell rating on the stock. Keep it right here on Yahoo Finance. We'll be tracking all the latest market moves and top calls throughout the session.
AI will be front and center today as CES kicks off in Las Vegas. At the heart of the AI trade is ChatGPT parent OpenAI, which we just named as Yahoo Finance's most recent company of the year. We sat down with OpenAI CFO Sarah Friar to discuss the state of the AI giant.
We're energized to get an award like this. It, really cements, I think, what ChatGPT has become, which is the world's default intelligence layer. On top of that, compute has become the foundation of this next era of AI. And I think thirdly, it's been a year where we have really hit kind of this day one of the next phase for OpenAI. We became a public benefit corp. We've raised a lot of capital with a really strong balance sheet. And we've seen, as you said, a lot of the ecosystem really start to move towards us to help us create this future.
Over the past, let's say, 10 years of my career, Sarah, I've watched your career from afar. You and I have talked in your prior roles as a CEO of Nextdoor. You've grown businesses and worked with some really transformational leaders. I think about the business you helped scale at Square, help Nextdoor grow its business. Now you're at OpenAI. How are each of these situations different, and what similarities do you see?
Yeah, so I think first and foremost, I do love growth. Growth is a moment where you get to really see impact to your customers. And probably the big thing for me this year has been the shift from not just 800 million weekly actives on our consumer platform, but we've gone from kind of single product on a single platform, doing a single thing in terms of the modality of the actual model itself, and also singular revenue streams. And what I've seen at those other companies, but now I'm seeing, just at a much faster pace at OpenAI, is the model itself has gone to multimodal. So you can now engage with voice, with vision, with auditory. We've seen our revenue stream go from a very simple single subscription, $20 a month, to being able to buy a high-end subscription for people who are power users on products like Codex, to being able to offer ChatGPT into areas of the world where $20 a month is price prohibitive. And we've started to offer credits. We have, of course, now offered ChatGPT in many different ways. So you can get it as an app on your phone, you can get it on your desktop, you can get it through our Atlas browser, and of course, you can start to download our Sora app. So a whole other way to experience AI in video. And then finally, we are multi-cloud. So in terms of risk mitigation on the back end with compute, we now have many, many more suppliers and partners in our ecosystem. And that helps risk mitigate, but it also introduces a little bit more healthy competition. And we think positions us to really build something incredible as we head into 2026.
You're no stranger to looking at financial statements, Sarah, to say the very least. How do you know, with a platform growing as fast as OpenAI, how do you know where to allocate capital?
Yeah, so that is probably one of the most important jobs, I think, of a CFO. It's also one of the most complex. And of course, it changes, right? You just asked what it's like to be in a growth company. A lot of what changes is you get new information, not just every 90 days, but as often as maybe every week. And you have to be able to stay nimble and flexible, but also have a through line so that you are always investing both for the really long term as well as making short-term tactical moves. So I'll give you some examples of that. Sometimes it's a new product or a new feature just hits big. So in 25, we said this would be the year of agents, and that's absolutely what we've seen begin to happen. But there was that viral moment with image gen back in kind of the May timeframe where we just saw our app go exponential on exponential. And that was a moment where we had to pivot and say, okay, now we need more compute to put against this. And we're really going to double down. Clearly, on the creative side, consumers are finding real value here. So that's a moment where you make a tactical shift. Another good example has been our shift towards more enterprise investment. So when we entered this year, we looked at our revenue, and it was about 70% consumer, 30% enterprise. And I think actually we did an interview where I said, it's hard for the enterprise to catch up because the consumer is growing so fast. But we said, that doesn't matter. Enterprises need to be able to get access to intelligence. So we're going to go really hard after enterprise customers and get them there. And so we'll actually exit this year with our revenue now tipped 60-40. So that's a big uplift on the enterprise side. So that was a decision too about capital allocation towards the enterprise, balancing with consumer. And then I think the hardest decision is actually around these really longer term duration compute contracts. Because of course, the compute that we've used in 2025, we didn't just find in 25. We actually had to make a decision probably in 2023. And what we have seen is that as we invest in compute, our revenue grows almost at the same pace. So if you look in 2023, the total compute we exited that year was only a mere 200 megawatts. We'll exit this year at 2 gigawatts, so 10x. But our revenue similarly, or our ARR, went from about 2 billion exit in 23 to almost 20 billion now exiting 2025, actually a little bit more than 20 billion. So that decisioning about what compute we will need, not even in 26 or 27, but actually in 28, 29, 30, those are the sorts of long-term capital allocation decisions we're having to make right now as well. And so it's a very interesting balance. And I will tell you, I use our own product for a lot of that too. ChatGPT often helps me make tough decisions, or at least shows me what might be the trade-off.
Hold on. You're forecasting your business using your own product?
In finance, we have been massive adopters of ChatGPT. It's something I talk to CFOs about all the time. It can start in really small ways. Like, for example, we have agents that help us with onboarding suppliers in our procurement supply chain. We have agents that help us look at our monthly close to say, what is this flux? Like, why did this happen? We use connectors to actually connect back into other systems like Slack or into our Google Docs so that we can actually explain why did performance marketing double or triple in a particular period. And then often I will use it when I'm in the midst of like a tough problem, like during planning, for example, to say, okay, this team just gave me this planning memo. It looks excellent. But knowing what you know about the other areas where we're investing, what might be the best question for me to ask right now, or what might be the trade-off that I haven't considered? And it is fascinating and fabulous to feel accelerated and amplified by intelligence, right? Remember, ChatGPT is like having a PhD in math, physics, chemistry, biology, sitting right beside you, helping you with your work.
I wish this is one of those moments where I wish this was one of those 6-hour podcasts, but you and I don't have that time, especially you. All right, let's get some numbers out of the way. How many users are on the platform? It sounded like you just told me you'll hit, 20 billion in sales this year. What does that look like? What is ChatGPT telling you it might look like next year? Does it double? And how many people are paying for the platform?
Yeah, so today we have 800 million consumer users, so weekly active users of the product. On the enterprise side, we have 1 million enterprises using the product. And remember, our enterprise business is only a couple of years old. It's kind of mind-blowing to me. From a developer standpoint, about 4 million developers are developing on the platform. And in terms of growth, we just put out a report. Our amazing econ team put out a report yesterday called The State of Enterprise AI Adoption. It has a ton of fascinating facts and figures about how much adoption is going up. One thing I would call out to your audience is what we see is frontier users in the enterprise are using messages about 6x more than even just the median. And so I think one thing we all need to be careful of, particularly CEOs and executive teams listening in, is that widening gap, you can't let it get too wide because you're going to get behind your competition. And our job is to help you figure out how to deploy it appropriately. As we go into next year, you mentioned that 20 billion, it's 20 billion of ARR. This year we'll actually do about 13 billion of in-period GAAP revenue. And our growth rate just continues to, climb. So I'm not giving forward forecasts, but to say we're very upbeat, very optimistic about what the business looks like in 2026.
You have been in a period of what your CEO, Sam Altman, has called Code Red. Now, full disclosure, before he came out with that memo, I never heard of Code Red or any of those moments or calling it that moment. During this moment, what is it like inside of the company?
Yeah. So first of all, I'll tell you, I actually personally love a Code Red moment. It is a bit of a tech term. I've seen it used across almost every company I've ever worked in. You can't do it too frequently because it exhausts people and you start to get a little bit the boy who cried wolf sort of thing can kick in where people just hear it and then they go about their business. Code Red is really just saying to the company, the main thing needs to be the main thing. And so if you are working on many things, but you're being told you have to get this done, in particular, a big focus on ChatGPT and how we show up for our users, and it might be consumers all the way through into enterprise users, you need to prioritize that first and foremost. It starts with our models and making sure that our models are on a faster kind of speed of velocity of iteration. As I said earlier, we do put new updates into the model all the time. So even though we might not name it a new model, the ChatGPT, the current is 5.1. We may have a new model coming soon. But that 5.1 is not the same 5.1 that you got a couple of weeks back. But we want to speed up that velocity and really take what we're learning both in pre-training, post-training, and then even during consumer usage, there's a moment where if we offer more compute, and this goes back to why we need more compute, we can actually create a better experience and more learning about what is the highest, best answer we can give a user. So Code Red is about focus. Main thing is the main thing. And I think it's really good for companies.
Coming up, Bitcoin breaks back above $90,000. We'll talk about the big predictions for crypto in 2026 next. You're watching Market Catalysts. Bitcoin is back above $90,000 per token, but the largest crypto tokens closed out 2025 in the red, despite hitting record highs and clearing regulatory hurdles. So what are the catalysts facing crypto in the new year? Let's talk about it with Brady Dale, author of the Front Stage Exit Substack. Brady, it's good to see you. Obviously, it was an interesting year for crypto in positive and negative ways, mostly negative price-wise. So as we go into this year, I guess I would ask first about price, in as much as anybody can predict price. But what are the things you're going to be watching that could be potential catalysts to the up and downside?
The guys at Castle Island Ventures, an investment firm, have been saying that they think that there is an exchange out there who was wrecked by the market disruptions in October. If you remember, there was just massive losses in October as a bunch of futures went sideways. And they sort of think that might have taken someone big out. And so we've had forced sellers for the last couple of months. If that turns out to be true, if that really is what's been holding Bitcoin down, then once that forced seller is dealt with, things could look really good. Of course, we see Bitcoin up right now. That's probably because people are expecting a lot of oil is going to come to market soon. Those are two positive forces. I also think if regulation comes into focus this year for real, not just like ideas about regulation, which is kind of what 2025 was, we'll see a lot more excitement in the crypto market.
Yeah, I mean, we had stablecoin regulation in 2025, right? The big thing that everybody is looking for now is the so-called Clarity Act, right? That's going to, it's sort of the market piping, if you will, right? Is that the right way to describe it? How do you think that's going to play out?
Well, first of all, just to note, the stablecoin law passed, but it hasn't actually kicked in yet. So, I mean, that's important. But on the Clarity Act, so I don't think the Clarity Act is going to pass. It's just like the Senate just hasn't been able to move that at all. And now Cynthia Lummis, who's been one of the big proponents, has announced that she's retiring. That gives her a lot less political capital to work with in Washington. I just don't think that they can get it done. But I don't actually think it's going to matter, because I think Paul Atkins and the SEC, along with the CFTC, which is now being run by one of Paul Atkins's deputies, is going to give the industry all of the regulations that they were hoping for in 2017 and 2018. And that will be more than adequate to allow it to move forward in a big way. So I don't expect Clarity Act to move, but I don't actually think it's going to matter, because I think the SEC will do a good job on this topic.
So, Brady, I think the big question then becomes, if the SEC gives the industry everything it wants, critics would say, whoa, right? There are some red flags there. Everything the industry wants might not be good for investors. So I guess what's the risk that something happens, right? That, you know, there is a blow up of some kind, or that there is a public risk of some kind that comes to the fore?
Yeah, great question. I mean, notably, I don't mean to say give them everything they want. I think they'll give them enough that it can move forward in a solid way. I don't want to overblow it here, but
fair.
It's notably, I think, a thing that people don't understand about the way regulation works in the United States is we have a disclosure-based regime. That means that we expect our regulators to make sure investors have enough information to move forward. Unfortunately, the prior SEC seemed to think that its job was to prevent the public from investing in things that they didn't want the public to invest in. And that's just not how securities laws have been set up in the United States. So look for the SEC to create rules such that people can know what they're actually buying into, but they're not there to hold investors' hands. So I guess that's the first thing. The second thing is, I do honestly think probably another giant blow up is going to come. I don't actually think that crypto has had its .com moment yet. So yeah, that will probably happen, and folks should proceed with caution in the crypto market, just as they should proceed in caution in any section of investing.
And I know that you're watching in particular prediction markets, which we don't necessarily automatically think of as crypto markets, but many of them are set up, backed by a blockchain. That's how they work. Yeah. What could happen? We've already seen enormous growth in that area. How is that going to play out?
Yeah, prediction markets aren't inherently crypto, but they very much have crypto vibes. The crypto world was always into prediction markets long before it actually became a real thing. So I think they're related. I think that prediction markets have a very bright future. I think they're only going to go up from here. Your viewers may not realize that there's as much volume in prediction markets right now as there was at the height of the election in 2024. People are using them for a lot more things. But it is an interesting new world we're entering into, and I kind of think we're going to see something unsettling happen in prediction markets. For example, someone might predict that some CEO is going to lose their job and then do things to help make that happen. I think there's going to be ways in which prediction markets don't just help us understand what's to come in the world, but actually influence what's going to come in the world. And once that becomes clearer for policymakers, I think they're going to be a little more anxious about the sector. It doesn't mean I think it should go away. It's just that I think we're going to have to grapple with that reality that they aren't entirely a neutral force in society.
Yeah, I think that's been the sort of concern about them. Do you think this current regulatory regime would actually do anything about that, though?
I think they're going to keep an eye on it. Yeah, I think it probably makes sense to let the world actually figure out what the problems are before you make rules to stop the problems rather than try to anticipate the problems ahead of time,
I guess we'll see once it becomes clear what they are. Brady, thank you so much. Appreciate your time this morning.
Thanks for having me.
Thanks. Coming up, we'll hone in on the AI industry and growing concerns of a potential bubble. Stay tuned. You're watching Market Catalyst. It's a new year, but one question that still weighs heavily on Wall Street is the AI market in a bubble. With trillions of dollars on the line in investments, we are looking beyond the hyperscalers like Nvidia and Google to uncover the ways the AI story may not add up. Here to discuss, Washington Post columnist Bethany McLean is also contributing editor at Vanity Fair and of course is well known as one of the first people to uncover the fraud at Enron. Thank you so much for being here.
Thanks for having me.
Before we dig into the case of RadNet, which you dug into on Hunter Brook, which is another site that you write for, I'm curious your thoughts more broadly on AI, the market, whether it is in a bubble, and sort of how people should think about it and figure out if it is or not.
Well, the piece I wrote for the Washington Post was basically the idea that two things can be true at the same time. It can both be this utterly world-altering technology and lead to some financial calamity. And I think that's my best guess. I mean, the truth is nobody knows. And I think what's so interesting about this time is that there are really smart people on both sides of the argument. And so in the case, if you think back to the dot-com bubble or to Enron, most smart, skeptical people started to bet against the dot-com bubble. Most smart, skeptical people started to bet against Enron. That's not true this time. I know really smart investors who are all in on AI and really believe it's going to be this earth-shaking, world-changing, financially profitable thing. And so it's really hard to arrive at kind of a consensus of the smart money, if you would.
Are there smart, skeptical people though? It's tough. It is tough. I mean, just anecdotally for myself and the people we talked to on the show, it is pretty tough to find them.
It is, and so that's a really odd thing. I do know some people who are really smart and really skeptical and think that this whole thing is going to end in disaster and think that the use case for AI isn't there, and I hear arguments on the other side. And so I'm in the I don't know camp, but if I had to guess, I would think it would be that both things will be true, that it will both be utterly world-changing for all of us and perhaps in not so good ways, but also that there will be financial calamity along the way. I just can't see the math working in the short term.
I mean, there's also this really interesting disconnect right now between the people who are investing in it and making money off of it and maybe the rest of humanity or the majority of humanity who are very nervous about it. And even some of the people who are investing in it who say, well, eventually if it becomes sentient, it might wipe out humanity or whatever. There's a non-zero chance.
Right.
So there is that also disturbing and strange disconnect.
Yes.
Which I guess has happened in technological waves before, but feels more acute this time.
I think you're exactly right. I think it's really profound this time because there are all these polls showing that the belief in AI or the excitement about it really varies dramatically depending on whether you're in an elite income status or not. And elites are really excited about this and other people are really terrified. And I think that absolutely makes sense because if this does work, it is because of productivity to some extent. And productivity means fewer humans having jobs. And that means fewer jobs. And what do we do then? And for all that people suggest something like universal basic income as an antidote to that, a cure for it, that's not humanity. That's not the way we've functioned. We all want to have a purpose. We all want to have a reason to exist. And sure, yes, go do art. I mean, I think the societal disruption side of this is actually really quite frightening.
Okay, so we have that big picture, those weighty questions that we're grappling with. And then you have specific companies like RadNet, which, as I mentioned, you dug into on Hunter Brook, that it's difficult to suss out what is AI actually doing for them. And they say it's doing quite a lot. So what did you find?
Right. Well, that does remind me of the dot-com boom, and I think does a lot of us, those of us who have been around for a long time, right? I mean, do you remember that story of Zapata, the fish food company, that in the dot-com boom just stuck a .com on its name and the stock shot up, I don't know, like 1,000%. Yeah. And so there's a lot of that going on today, and that was certainly true in the case of RadNet. They've rebranded themselves as an AI company in a couple of ways. One is convincing women to shell out an extra $40 for a so-called AI read of their mammogram. It's not covered by insurance. And radiologists are pretty skeptical as to what the value add of this is. There's a big test case going on now, but it's funny, my cousin is a radiologist and I was talking to him about it and he's quite skeptical of what of this, and certainly for all the projections that AI was going to wipe out radiology, that's not happening. so far. And then they have this.
And they own radiology centers,
yes,
right?
Yes. And then they have a technology that is supposedly an AI solution that they're trying to sell to other radiology centers. And there's a question both of how much AI is actually in that and whether any other centers are going to buy it. But so I think there will be casualties like that in the stock market as well, where everybody has latched on to this idea that there's an AI play here, and there may not be.
Well, and in this case, it sort of goes back as well to the question of, at some point, do you have AI reading a mammogram and not human at all?
Yeah, and there's a big study going on to see if that's possible, but there's some historical precedent. There was a big hype around a technology called CAD, and that didn't prove to be all that additive. And so again, mixed bag. AI, the improvements in what it can do are absolutely remarkable. But so far, I would say the answer is no.
Gotcha. Okay, so investors should maybe be on the lookout for companies that are throwing in all of those mentions and sort of dig a little bit deeper to see if it's real.
Absolutely. And I think the other thing that's really important in all of this, and that is worrisome, is that in all the complex financing structures that are funding AI, people don't really understand, right? And it's the lack of understanding that causes a surprise, that causes confidence to break, that causes the whole thing to come crashing down. Because at least for the foreseeable future, AI depends on investor confidence to continue to be able to raise money. And so if in all of these financing structures there's a nasty surprise, something people didn't get, people didn't understand, that in and of itself will cause it to come crashing down, even if the revenue might be there in the long term. Does that make sense?
Well, and even if ultimately it's legitimate, to your point, if it hasn't been explained correctly, it might not matter.
Right. And a smart venture capitalist said to me, I don't get why, if this is real, why do we need all of these complicated financing structures? Why does this is the sort of stuff you see in a late stage craze where people are trying to cover up something that isn't working. So why do we see it now? So in that very complexity, I know I'm suspicious of complexity, but in that very complexity, I see some reason to be concerned.
Yeah, that's a really interesting point. Thank you so much, Bethany. Appreciate
Thank
it.
you.
Good to see you.
You too.
Coming up, we have full market coverage ahead, Market Catalyst and Yahoo Finance. Stay right here.